Good afternoon, it's 2 p.m. This is Market View. Thank you for tuning in. My name is Lungilele Makakula. Today, all eyes turn to Livingstone, Zambia, as the COMESA Competition and Consumer Protection Regulations are officially launched in a landmark event for the region. The new regulations have been unveiled by the Secretary General Chileshe Mpundu Kapekwe, marking a new era for competition and consumer protection across the common market, spearheaded by the COMESA Competition and Consumer Commission. These regulations repeal the 2004 COMESA Competition Regulations, a framework that has served the region for over 2 decades. And according to the Secretary General, this update signals a stronger, more modern approach to fair markets, business accountability and consumer rights. On Enterprise Watch today, we speak to the Eswatini Competition Commission to find out how they plan to ensure effective implementation of these new regulations back home. Stay with us. The future of competition and consumer protection in the region starts now. But first, let's take a look at our business news. In our first story, the COMESA Competition and Consumer Commission has launched the COMESA Competition and Consumer Protection Regulations in Livingstone, Zambia. The new regulations have been unveiled by the Secretary General Chileshe Mpundu Kapekwe, marking a new era for competition and consumer protection across the common market. We now cross live to Livingstone, where our business journalist Nelsie Wentlangamandla is standing by with a report from the launch. Nelly, good afternoon. What do you have for us on the launch today?
Thank you so much, Lulu, and good afternoon to the viewer at home. We are here in Zambia, where the COMESA Competition and Consumer Commission is launching the new regulations. The regulations they are replacing those that were made in 2004. So they have said that it was time for a change, especially now that trade is online. Technology has brought in a new dynamic on how business is done in the region. I want us now to take a listen to the Secretary General as she unpacks the importance of these new regulations.
In this regard, Article 55 of the COMESA Treaty should always serve as a reminder of our shared responsibility to prohibit practices whose objective or effect is the prevention, restriction, or distortion of competition within our common market. We should always be reminded that such practices have the potential to negate the objective of free and liberalized trade in the common market. The 2025 regulations seek to address the gaps which were identified in the 2004 framework and introduce modern tools required for today's markets. They seek to strengthen major control through a new suspensory regime, enhance enforcement powers, provide mechanisms for regulating digital markets, including digital mergers and gatekeeper conduct. Matters to the COMESA Court of Justice, one of the organs of the common market, ensuring transparency, fairness, and a stronger foundation of the rule of law across the region.
After the Secretary General made her speech, the Chief Executive of the Commission made it clear that stronger modern protections for consumers are necessary. Let's take a listen.
Globalization and technological advancement contributes to changes in market dynamics, and that's why we
launched today.
The revised regulations come at a critical time. Our markets are increasingly interconnected, dynamic, and influenced by digitalization, and cross-border commercial activity. The new framework, therefore, clarity, enhanced tools, and a stronger foundation for effective regional enforcement. Consumer welfare, and deeper regional economic.
All the speakers have shared one sentiment, that there was a need to improve the regulations in order to level the playing field for businesses, protect the consumers, as well as strengthen trade in the region. So these regulations are meant to boost trade in the region while ensuring that consumers are protected. Back to the studio, Lulu.
Right, thank you, Nelisia. That is Nelsia. She's in Zambia for the COMESA competition launch of the regulations. We continue with our business news. Government has been challenged to increase national gross expenditure on research and development to align with the African Union target of at least 1% of GDP in the next 5 years. This is stipulated in the draft National Science, Technology and Innovation Policy 2026 to 2031. Under the pillar of financing and commercialization, the framework aims to promote development of venture capital, seed funding, and early-stage innovation financing mechanisms. The Eswatini Economic Policy Analysis and Research Center, ESAPOC, says with research spending below 0.2% of GDP and youth unemployment at 56%, the policy is positioned as a business growth strategy and economic reform tool aimed at unlocking new industries, supporting SMEs, and driving technology-led growth in Eswatini.
The validation session convened by the Ministry of ICT comes at a time when Eswatini is seeking to diversify its economy and reduce dependence on traditional sectors. According to the National Science, Technology and Innovation (STI) policy, government is challenged to ensure that 20% of all public procurement contracts are directed to local technology startups to stimulate the domestic innovation ecosystem. Senior Research Fellow for the Eswatini Economic Policy Analysis and Research Center, ESAPOC, Tengetile Hlophe, explains the progress undertaken to ensure that sectors such as finance, agro-processing and manufacturing lead in innovation to unlock exponential economic growth.
So within the agricultural sector, there is also a limited research there and also the use of innovation. So we need to do more to improve or increase the adoption of climate smart technologies. There's still low technology adoption within the manufacturing sector. And here what we are also seeing is that the low technology adoption is also related to the availability of skill and the quality of the skill that is available. Companies are interested in automating processes, but you find that they do not find the relevant skills or trained people to assist in the automation of industrial processing. And then when it comes to the finance sector, we also see some advancements over the past 10 years. We are seeing government adopting the financial inclusion strategy, government adopting the fintech strategy, which also are instruments that have been used to try to increase the inclusion of Eswatini within the digital economy.
Lead researcher at the Youth Chamber of Commerce and Industries in Eswatini, Alan Lloyd Hamusokwe, submits that while in place, the national STI policy should speak to local businesses managing finances spent on import services.
I went to the World Trade Organization and IMF numbers, and I found like we are importing $1 billion worth of our services. So I saw that within the value chain that you're seeing, the problem ends up becoming with us not knowing how much of the business is actually spending within these particular services. An example would be research and development. And then understanding would say, okay, if that's the amount, then now we can actually make sure that this particular policy speaks to ways in controlling that sort of flood in and out.
Victor Shongwe, agricultural lecturer at UNESWA Luyengo campus, pointed out that for the policy to have real impact, it must be considerate even of rural agricultural systems.
A lot of what we call innovation and what we call the development, it must also touch the rural areas. Because when you look at the situation, a lot of what we call advancement requires energy. And when you go to the rural areas, it's actually a shame that you have a place like Mbabane receiving a lot of rain, and when you go to Labumisa, it's dry. So I would like to see the development also touch issues of sovereignty, food sovereignty, starting from water and energy.
The manufacturing sector currently contributes just under 40% to GDP, while agriculture accounts for just 6%, despite employing a significant share of the population. In the policy, the government commits to strengthening the national STI ecosystem by mobilizing sustainable and diversified financing, strengthening private sector participation, and enhancing innovation commercialization systems. Given that the policy is built around 5 strategic pillars, including human capital development, it requires government to ensure that 25% of the workforce is skilled in STEM by the year 2031. Reporting, Notsele Sitole, Smuva Shongwe, Manzini.
And that marks the end of our business news. It's 12 minutes after 2. We continue after the break.
Hello to all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Mbabane. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
Welcome back. Thank you for staying with us. In our first story, we reported that the COMESA Competition and Consumer Commission has launched the COMESA Competition and Consumer Protection Regulations for countries in the region. We are now joined by Sibonise Selzulu Simelane, Maseko Director, Competition and Consumer Protection at the Eswatini Competition Commission, who will speak to us on what these regulations mean for local businesses. A very good afternoon, Mrs. Masego. Thank you for joining us here on Market View. Can you briefly unpick these regulations and also further explain what they exactly mean for local trade?
Good afternoon, Tombeni, and thank you for having us on the show today. So the new regulations were promulgated in December 2025, so they are just a few weeks old. And they come after the initial regulations, being the COMESA competition regulations, which were enacted in 2004. So it's almost 20 years since we had the initial regional competition law, and now it has been amended and enhanced. Some of the enhancements that we can see in the new regulations include improved consumer protection provisions. We can see an entire chapter on consumer protection, which we didn't have under the old regulations. And this is important because it incorporates the consumer rights as part of the regulation, so as part of the enforcement regime. So consumers' rights to safety, consumers' rights to information, and consumers' rights to redress as well. Another change that we see for anti-competitive business practices is that there's an introduction of a corporate leniency program at regional level. This is a program where companies can self-report, so they can say that I've been part of anti-competitive conduct, but I'd like to stop it, and there's a framework under which they can cooperate with an investigation. Sort of like a whistleblower, but for competition law, we call it corporate leniency, because what it means is that you get some sort of a reduction on the penalties that you would have originally gotten if you hadn't cooperated. We also have a provision where if there is a penalty on a company that has violated the competition law, those penalties will be shared with member states. Under the old regulations, only the merger notification fees were shared with member states, but in the new dispensation, the penalties will also be shared with member states. And when it comes to merger control, previously, companies were able to notify the COMESA Competition and Consumer Commission about their merger, but they did not have to wait for a merger decision. They could go ahead and implement the merger. But under the new regime, they absolutely have to wait for a decision from the COMESA Competition and Consumer Commission. So they call it now a suspensory regime, which means you suspend the implementation of your merger until you get your decision. So we're quite excited for these changes. There are obviously a whole lot more changes. We were in session this morning and the executive director was taking us through some of those changes and what they mean. We have provisions now to cover digital markets. Previously, we didn't have a specific provision on digital markets, and we have that now. So we're quite excited for those changes, and we look forward to seeing the enforcement under the new regime. Makakola.
All right. I know that with regulations, the compliance is a big factor. So how will the Commission ensure that local businesses comply?
Thank you, Tombeni. Our role as the Eswatini Competition Commission is twofold. We are going to support the COMESA Competition Commission in enforcing the regulations, which means we become part of investigations that they undertake using their powers. Previously, we were using our own powers under the Competition Act to assist in an investigation, but now we use the COMESA powers to assist in the COMESA investigation, which is an enhancement of powers, if you will. So necessarily, we have to help businesses to understand how they can comply. We look forward to this being done through some seminars and webinars. Most of them will be hosted by COMESA Competition and Consumer Commission, but some of them will be hosted by us as the Eswatini Competition Commission, so that we can help businesses in Eswatini understand what their new obligations are under the COMESA Competition and Consumer Protection Regulations, and also how they can complain, because we have some new provisions that give more protection to businesses in Eswatini, especially small traders.
All right. You spoke of penalties that will be given to some of these businesses. Will the Commission have powers to grant leniency with these businesses?
Yes, they will have the power to grant leniency as the COMESA Competition and Consumer Commission, and we are required by Eswatini to honor that leniency. Leniency, Sutu, is very tricky because it's a criminal at national level. Because it's a criminal liability, leniency can only be granted by the authority which is responsible for criminal enforcement. That's the Director of Public Prosecutions. But what we have at regional level, it's not a criminal enforcement. It's the COMESA Competition Commission that can grant leniency, and we are required to honor that leniency. So if the COMESA Competition Commission gives a company leniency, then we cannot investigate that company. And not only the Eswatini Competition Commission, but all the other structures in Eswatini would have to honor that leniency and make sure that we don't then initiate a proceeding against a company that has reported at COMESA level.
All right, just one more question in under a minute before I let you go. How critical is it that businesses follow these regulations, and what are their benefits? In just a minute.
Sure. It is critical for them to comply. We see the Africa continental free trade area opening up markets for our businesses. And in order for them to be competitive and efficient, they have to comply with the COMESA competition regulations. But they can also, some of the benefits include complaining as well. We have something called an abuse of economic dependency. So if you're a small company and your major supplier is misbehaving, you can initiate a complaint against the major supplier, even if that supplier is not dominant. Whereas in the current dispensation, they have to be dominant. But I mean, I hope I can come back to the show to speak a little bit more about this in more than a minute. But I think my minute is up.
Yes, thank you so much. Hopefully you'll come back. Definitely we need more clarifications on these regulations. Thank you for joining us this afternoon. After the break, we'll connect with Sanele Sibia, in-house economist. Stay with us.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
For staying with us in our final segment, we now connect with Sanele Sibia, in-house economist, for today's market analysis. A very good afternoon, Sanele. Thank you for joining us this afternoon. What is happening in the world of markets today?
Thank you, Lungelele. Good afternoon to you, and also a good afternoon to the viewers. So in terms of markets today, we are seeing the impact of President Trump's tariffs. You know, we've woken up to, say, to a 10% blanket tariff across the board as President Trump has had to rethink his tariff strategy after that Supreme Court ruling that his initial tariffs were illegal. So there's now a blanket tariff of 10% across the globe, and that has sent the US markets and the European markets into shivers. So the Dow Jones Industrial Average has lost 821 points. The Nasdaq Composite has lost 258 points, and the S&P 500 has lost 71 points at close as of today. And then the true story there on the Nasdaq Composite Index, you can see that it's now subdued back to that 2,000 mark. Yet when the 22,000 market, we're sitting on the 24,000 mark, going for those 25s just a couple of weeks ago. Now that's largely due to the fact that there are those AI disruption fears. You know, now around AI, now we have the overvaluation fears and the fact that it will disrupt existing industries and, you know, the flow of money in the economy. So now that shows in the movements within the Nasdaq. And then coming into the UK, Europe there, starting with London, the FTSE 100 has lost 24 points in today's trade, and Germany has lost 20 points in today's trade, while Paris continues on an upward surge, sitting steady on on that 85,000 mark in terms of old share volumes, largely driven by the fact that we are seeing those tariffs coming through, and also the fact that we are expecting a bit of more defense spending. So that's why we're kind of seeing markets holding on to that all-time high, more especially in the UK, because right now we know there is this ongoing meeting on the Ukraine and on that war anniversary, the 4th year, and we're seeing those pledges in terms of defense spending coming in, and that's tending to show up markets. And then coming into Asia, upon return from the very long holiday of that Asian New Year, we're seeing, markets in Hong Kong, in Japan and Shanghai, traded on an upward direction in today's trade, with the Nikkei there gaining 495 points, and the Chinese, the Shanghai Composite Index gaining some 35 points, while we're seeing the Hang Seng being subdued a bit, largely because, there are those fears around that AI and also the issues with tariffs, but they're not coming so hard into Asia because we know that, China has always gotten the worst brunt of the tariffs. So right now sitting on 10%, and that lack of clarity tends to work for China right now. And then in terms of the Johannesburg Stock Exchange, we are back on that 124,000 mark. But on intraday trade, the Johannesburg Stock Exchange had lost some 317 points in today's trade, largely due to that tariff story there. But we're also seeing a bit of a firmer footing coming through in the South African markets as we move on to the budget. So overall, the impact of the uncertainty around tariffs has somewhat a limited effect on South Africa, because, there's a GOA and the 10% tends to work for South Africa right now. And we are just waiting to see what the budget is going to look like tomorrow. But then also just pulling the number down there in South Africa is movements in terms of the prices of gold. Gold has lost some 39 points in today's trade, and now that tends to affect that Johannesburg metal heavy index there. And then coming into Eswatini, there is no movement. And then in terms of the commodities, gold still remains above the 5,000 mark, but due to some profit taking, it has lost some 39 points in today's trade, and Brent crude oil is sitting at $71 per barrel. And now that's largely driven by the Iran issue there. So there's still a lot of tensions, and we've seen students for the first time in Iran's history coming out to protest. So that region remains very volatile, and it might spill over to the entire region. So that's why markets are a bit on edge. And then in terms of the currencies, we are trading at 15 emalangeni 97 cents per dollar, and trading at 18 emalangeni 82 cents. Per euro there. So we're seeing that strength in the currency coming back, largely pushed by the price of gold, and also the fact that we are expecting a good enough budget to come through tomorrow, with Minister Konongwana expected to say that he is debt stabilizing and improving the domestic resource surplus. And then in terms of the Japanese yen, again, the lilangeni is strong against the Japanese yen, with one lilangeni trading for 9.76 yens, largely driven by the fact that we're seeing gold on an uptick and the macroeconomic fiscal stability there.
Right, thank you, Sanile, for that analysis. This was our final segment of today's episode. This was the Tuesday edition of Market View. Thank you for tuning in. We'll see you tomorrow at exactly 2 p.m. for Nedbank Business Watch. Have a lovely day.